Welcome back to the channel, everyone. I'm really excited because it's January 2022. It's my favorite time of the year. It's the time of year that the government announces the new contribution limit for our TFSAs. This year's limit is $6,000, meaning if you've already maxed out your TFSA, beginning today, January 1st, 2022, you have an additional $6,000 of room where you can invest and watch that bad boy grow. So currently, if you've been investing in your TFSA since its inception, you would currently have $81,000. If you've been maxing out your contribution limit since 2009, you would currently have $81,500 if this money hasn't grown or shrunk. So you guys got a lot of new money to invest, and that's what this video is going to be about. I want to bring up a stock to bring to your attention. It's the TMX Group. It's under ticker X on the TSX. It's currently trading for $128.28. It has a dividend yield of 2.4%. So it's not very high. It's not very low, but it's kind of right in that medium range, but it's a grower. It is a grower, not a shower. We're going to get into the dividend history in a little bit, but this is a really interesting stock. It's been on my watch list for quite some time now. I've been waiting for a little bit more of a dip, to be honest with you. This thing just doesn't go down, though, is my problem. The 52-week low is 120 and the 52-week high is 145. So, I mean, we're closer to the low, but it's still, I wanted a little bit more of a discount on this before I initiated a buy. But, you know, it's new contribution time for the TFSA. I think I'm going to jump in on this one. I'm going to talk about this stock because a lot of you probably haven't heard of it. It's not flashy. It's not your Apple or Microsoft of the world, but it gets results, it makes money, and it gets things done. This stock makes money in a very interesting way. What it does is it has ownership over the Toronto Venture Stock Exchange and the actual big one, the Toronto Stock Exchange. You can see here the revenues coming 61% from the TSX and 25% from the smaller little brother here, the Venture Exchange. So now that you know what they own, you might be wondering, well, how does the TMX Group make money from owning these exchanges? That's the interesting part, and that's why I really, really like this company. Every time a new company does an IPO, they need to pay to be listed on these exchanges. Every time these companies want to issue more shares, they need to pay the TMX Group an additional fee. And the subscription model here is what they use because there's a yearly fee just to stay listed. So they really have a monopoly here on this because, you know, they can't just have a new exchange pop up overnight. They have a big moat and they have recurring revenue. This is ding, 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 jackpot. This is a winner. Now that you have some type of idea of how they make their money, let's take a look at how they execute. If we take a look here, in year 2016, they were paying 40 cents per share in their dividend. All right, now we jump up to almost today, 2021. The last dividend paid out was 77 cents. So it's almost a double from 2016 to current day. Now, this is the type of growth that this is what gets me excited. I want to invest a medium amount of money in this company and let it. Now that you understand where their income's coming from, let's take a look at a couple important facts here. If we take a look at the share statistics here on Yahoo Finance, you're going to see that 13% of this company is held by insiders. This is very, very high, and this is reassuring to me. This tells me that the people running this business understand that it's quality, understand that they want to be a part of this, not just as a paycheck. They want to own the company, and that's very, very important. Held by institutions, 56%. So the big institutions like it as well. Everyone seems to like it, but this isn't a popular stock. People don't talk about this one, and that's why I'm bringing it to your attention today. It's very, very exciting. We referenced that the dividend yield is not very high. It's kind of in that middle ground, the 2.4%, not super, super exciting, but let's take a look at the payout ratio here, guys. The payout ratio is 51%. This is not that high. This tells me there's a lot of room for growth. And what makes that even more exciting is when we look at the dividend increase year after year, then you're going to see something special. Here it is. Here's the dividend growth on the screen here. If we look at in 2016, each share was paying out 40 cents Canadian, and if we jump up to today, it's paying 77 cents Canadian. So that's almost a double since 2016. So this tells you that this is a huge dividend grower. And, you know, if their payout ratio is only 51%, that tells you, again, their income is growing quite substantially, and they're passing along those earnings to you through the form of dividends. Another thing to point out is every third quarter they tend to raise. 1, 2, 3, raise. 1, 2, 3, there's a raise. So it keeps going on like this. Now, This isn't necessarily going to continue on in the future like this, but it's a good indication that this is going to compound your money for you well into the future. This is why I'm going to be buying into the stock. It's just a matter of when. Let me know if you guys have even heard of this stock before. It is an exciting one. I'm going to invest in it. Maybe you guys want to join me. Let me know. Thanks for watching the video today, guys. Give me a like and a subscribe if you found this a cool and interesting video, and I'll see you in the next one.